Hi, everybody, and welcome to the weekly market wrap for June 23rd, 2017. Let's get into it. One of the things that we had to do this week was actually take off a small loser in Intel. It broke our $34.75 risk target. So we put this on in the high 35 level, and it really just went down ever since we added it. So it didn't work. It was a quick loser, but it was also not a big one, about 5 or 6%. That's going to happen. I wanted to keep our risk tight. The reason being is because we did see some weakness a couple of weeks ago in the tech sector. And unless we get above the previous highs, I still want to stay cautious in that particular sector. So we are removing Intel INTC from the focus list. Secondly, what we're adding a company called Medtronic. Medtronic is a medical appliance and supply company, medical device maker. And the director of Medtronic, Richard Anderson, purchased $497,000 worth of Medtronic stock at around $88.90. So right at that level. Now what we're looking at is a monthly chart. So every one of these candlesticks represents 1 month. Now why are we following Richard Anderson? And I know a lot of people are thinking, hey, this stock looks pretty high. Well, his first purchase in the company was back when the stock was trading at $35 back in September of 2011. So he stepped in and purchased the stock right here at this level originally. And now, after the stock has gone up over 150%, he's not dumb. He knows he's buying more up at $88 and change than he did at 35. Why is he doing it? That's the question. So, I mean, the answer is he obviously thinks it's going higher. He's not forced to do it. He's doing it with his own money. So he sees a continued uptrend. Don't forget, anytime we're looking at charts, we're looking in the rear view mirror. This is high compared to where it has been. If it's going to 200, it's not high. Now, I don't know where it's going, obviously, but I do know that he thinks it's going higher. So we're adding it to the focus list with a projected price target of 105 and a risk target of 83.75. Once again, keeping with the theme of keeping our stops tight. One of the big things this week and for a while is the USO ETF, or essentially the price of oil. So we've had a situation where we're once again looking at a monthly chart here. We had that big drop in 2014 in the price of oil, and it really went down. And I know a lot of you that were in the oil stocks, as well as myself, either got stopped out or took huge losses. There was really no in between. Um, and then it started to rally a little bit and at worst start to base. But what's starting to happen here is we're getting kind of close to those lows that we hit in January 2016. Now, there's always been a debate whether low oil prices is good for the economy or bad for the economy. And the answer has always been, well, if you're in the oil sector or have a job related to the oil sector, it's bad. If all you do is buy gasoline to commute 100 miles a day, it's good, right? So it does have a yin and yang approach to what's happening overall, but it's just something to keep an eye on. Um, if supply is not an issue, which it actually is right now, the old adage is that oil is a direct oil price, if it's affected by the demand, shows a weakness in the economy. However, with the fracking and OPEC falling apart and not being able to stick with any type of cuts that they want to in production wise, I think it's more of a supply issue. So I don't think it reflects on the economy being poor. I just think there's more oil than people um, really need to consume right now. And I think that's why the price is going lower and OPEC can't control the supply. Once again, it's still worth keeping an eye on. Um, see how this goes, see if it breaks those January 16 levels. Secondly, taking a look at the NASDAQ 100 here in the ETF, and this is a daily chart. We saw this big downturn. It was a bad day, essentially, um, the other week, a couple of weeks ago, and all we did was basically trade sideways. So we're going to see if it could break out of this range and then retest and break these highs up here. If it can, terrific. We're, back on track, doing well. If not, though, I still want to stay. I'm not saying cautious. I don't want to short stocks arbitrarily. I just want to be in a position where if we do get stopped out, we're not going to get stopped out for 25% losses. Okay, so like in the Intel, if we get stopped out for a 6% loss because it just didn't work, so be it. That's part of playing this game. Sometimes we're going to lose, and we do have to take those losses and try and minimize them as much as possible. The other thing is the S&P 500 represented by this ETF, which is the SPDR ETF. This is a monthly chart. The monthly chart made another new high, continuing in the uptrend. You could possibly say this is a negative look to the end of the month here. We still have another week to go on this candlestick. But overall, we're in an uptrend. We've been in an uptrend. The bulls have the advantage until price says otherwise. And right now, it's not about how high we've been. It's about how much demand versus supply is in the market. So I'm going to try and keep this video somewhat in time today. I know last week kind of went almost to the 10-minute mark. So I appreciate you tuning in. I will continue to look for these insiders that are buying shares. We took off Intel, we added Medtronic this week, and I wish you have a great weekend. Thanks so much.